Okay, so good afternoon once again, everyone. Welcome to the Ideate session today. So today we already have in our midst the facilitator for today in the person of Olaito Olumide. Please, can you guys hear me? If you can hear me, please indicate. Let me be sure I'm not speaking to myself.
Yes.
Okay, great. So good afternoon once again. So we are bringing in the facilitator for today. Olumide Olaito is a dynamic and dedicated entrepreneur. Known for his commitment to positive change and empowerment, he's the driving force behind the renowned Ijebu Business School, a transformative platform that equips aspiring entrepreneurs with the knowledge and tools to succeed in their ever-evolving business landscape. As a master business trainer and coach, Olumide embodies the principles of ICSS in every facet of his work. His expertise extends far beyond conventional business practices. With a proven track record of success, Olumide continues to be a beacon of inspiration and mentorship in the world of social entrepreneurship. Please join me in welcoming Olumide Olaito. Welcome on board, sir.
All right. Good afternoon, everyone.
Good afternoon.
Hope you can hear me clearly.
Yeah, we can hear you.
Oh, okay. All right. So it's a great honor to be on this platform today to discuss and to have. I believe that we have a lot of strong minds on this platform and at this minute. I want to do what I love doing best. Okay. All right. Because of our time, so that we're able to cover a lot, with the limited time space that we have. I'll just go straight to, to what we're supposed to do. I've introduced myself. I don't need to introduce myself again. The introduction I carried done well based on that. But I would love to, I think we have about 10 people here. Maybe we can use the chat column, the chat icon to maybe just tell me, I just want to know who you are, your name, what you do, and many years. There's no need of just type it just on the chat platform. Just give us your name, what you do, what business or what business sector you are into, and from there we'll take it up. I just want to have a view of who the participants are, so that we have a clear understanding. Then, aside that, as we go on with that, I also want to permit that if I can have just 3 people just to share their expectation from this section. Just 3 people because of our time. You can, raise your hand, and you can just unmute yourself, just briefly, your expectation about this section, so that that will also help me to able to drive to, just not speaking outside the context and not speaking outside your expectation. So anybody? Or should I call someone? Okay, let me do randomly here. Let me call. Okay. I have Abiola Ayodele. Abiola Ayodele, are you there? Hello.
So I can see something.
Okay, all right. Okay.
Yeah. So my expectation would be Because finance is a major part of running a startup. So I'm
Yeah.
hoping to learn about things like taxes and just general things to be mindful of while running my business.
Okay.
Okay.
Okay. All right. Thank you very much. Any other person?
Good afternoon.
Good afternoon.
So
Your name, please.
my name is Abbas Akande.
Okay.
So my expectations to learn about the financial projection,
Financial projection. Okay.
company valuation, all these stage
Okay.
pre-seed, seed, CIA, Syria, and so on, and the rest. That's my expectation.
Okay. All right. Thank you. Any other person? I think I need a female now. Emanuela testimony. I hope that testimony is a male or female. Any person? Abiola.
Good afternoon.
Good afternoon.
Okay, so I want to learn on finances and valuation of startup, basically. Thank you.
Valuation of startup. Okay. All right. Okay. Awesome. That's good. Okay. That's actually is giving me that a kind of a framework to what to speak what to speak on. And at this juncture, I want to say, please, practically that it's not a teacher student section. It's going to be a conversation. So anyone that has any contribution or whatever, we also need have the opportunity to also share their mindset. Okay. Just as the topic given to me, talking about accounting and finance for startup, that's the topic I was given to talk on. I only want to bother us about what are the differences and stuff, but practically every startup definitely need finance. Yeah, and I quite good at if you ask all the startup, now what is the major thing they need? They will tell you the first thing is what? Finance. Yeah. But the question is how prepared or how have you able to structure your startup to actually get the necessary finance for your business? That's one critical question. And I see from the expectation, I see people talking about how to value your company, how to value your startup and stuff like that. Now, the first thing I'll talk about projections, which is quite very important. Many startups today don't actually engage themselves in financial plan or financial projections. And I will practically say that many startups actually do their financial plan in their head. Oh, I think if I do this, if I can sell this, I can do this, no. It actually takes, though it takes some level of expertise, but I will also, I also advise that no matter how expertise or no matter how that sector is full of technical issues, you still need to know some one or two issues. And at that point, it means that for you to have a financial projection, there must be what we call financial assumptions. And before you can come up with a financial assumption, I'm talking as a startup now. But for us to come up with financial assumptions, it means that you must have gone from aspect of startup. I want you to, I don't know whether you know that there's some level of startup. We have level of startup starting up, we have the MPV level, we have the prototype level, we have the market survey level. So these are levels of startup, but at the same time, not all these levels actually need need you to start putting on financial projection. For example, at the market service level, at that point you begin to gather financial assumptions for your business. That is where you begin to understand, okay, how many can you sell in a month? What are the number of customers you have at the moment? Then begin to make projection of, okay, in a year or in 2 years, what is the percentage or in terms of increase in customer? Because all these assumptions we actually help you in developing your financial plan. And like I said, financial plan is critical when it comes to starting up a business. Now, like I said, and this financial assumption now depends on what type of businesses or services, business you are doing or service you are rendering. There's no fit-it-all template that will say, okay, this is a template that fits all businesses. No, there are some, it is business specific. So, so at that point, I need to, I just want to see how we can talk more about the financial assumptions, because they differ from business to business, but at the same time, we have seen so far templates that can be used to build financial plans and to build financial projections. Well, some of them are not, are not free, and some are you pay for it and stuff like that. But at the same time, you can see there are still some issues, there are some things you can do on your own, even before you call for an expertise to help you build up your financial plan. For example, your selling price. Example, your reach out to customers, how many customers you want to reach out to on a monthly basis. Example, your cost of production. All these things you must have not even maybe a full a full scale information, but your assumption must be closer to at least probability, maybe +1 and +1 -1, so that business, like say, when it comes outside the template of paper, by the time you begin to put your actions or your paperwork into action, you definitely begin to see different things, and that's why we put probability in some of these things that we do. So now, that's the aspect of the financial projection. Now, I'll just quickly go through, talk more about validation, how to value your startup. And I will start from the aspect of the point of registration. I know that many of us, we have been told that you have to register your business. You register your business, some of us will do business registration, and some definitely will do limited liability, 1 million. But because of cost, many of us actually do business registration. That actually shows, okay, we are doing one-man business and stuff like that. But I used to advise many startups to actually, if they want to do their business registration, to go for limited company and look for a limited company with the higher ordinary shares, because these are some of the things that actually attract investors. For example, if I register my company, I register with CAC, and I have my ordinary shares, and I'm registering with CAC with ordinary shares of about 3 million naira. It means that the value of my company at that time of startup is 3 million naira. So if I go ahead and do a registration and say, okay, I want to value my company at that time, and do a registration worth about 5 million naira or 10 million naira, it means that you've already positioned your company. You've already positioned your company and say that, okay, you've already put a value on your company or your startup, and saying that the value of this company, even though it's a startup, is 10 million naira, because the registration you did is based on the 10 million naira ordinary shares. And when you are doing CAC registration, all these figures, all these things, they have their limits and they have their own benefits, and it's quite more expensive. Yeah, that's why I see that many people actually do not, run away from it and say, I don't have money to register a business, maybe what 10 million naira ordinary shares. I don't have that money now. But we advise a lot, especially people that are into the ICT framework, people in the renewable energy, because investors that come into this space are investors that actually are looking for organizations or companies that have larger or that have value their company, in higher amounts of funds. So that's one of these advice we give to startup. However, we are still it's just like I said, it's just an advice and see how we can do that. But it has actually worked for a lot of people. People do not even have funds to start up the operation of their business. When they do their CSC registration, go for 5 million naira ordinary shares, register it. I don't know the amount they register 5 million ordinary shares now, but that can be sorted. That can be look for maybe on the internet, or we ask the CSC, check from the CSC platform to check for the price or for the costs rather. So these are the components that is put together to put value on your business. Even though you've not even have maybe assets, you don't have any assets, you don't have anything, anything that people can see. The registration of business can put value on your business. If you register your business at 1 million ordinary shares and you're looking for fund, you cannot attract someone, you cannot attract maybe individual or personality that want to invest in you and say, okay, I want to give you like 10 million naira, because you've actually limited yourself to 1 million naira ordinary shares. So that's some of the ideas that comes, and it takes, many people don't understand. Many startups don't. Many startups just go to, I want to register my business. Let me register it, and I know that no. But many people have actually limited themselves in terms of registering their business and also connecting to get finance, to get financing for their businesses. So now, like just what I've just said so far, it shows that critically, if we want to ensure that we want to actually access finance, there are diverse ways. After I've mentioned one, that's at the point of CSC registration. Now, at the point of there are some people who do not have the capacity. Then it means that you have to go, possibly go solo. Then begin to build yourself. There's what we call bootstrapping. That means that you begin to sponsor. You look for finance or look for fund for your startup by yourself, maybe through savings, through families, family friends, and not at this juncture. Let me critically say this, and not with loan. I'm saying this critically, please. It is not advisable that startup actually finance their startup business with loans. It is not advisable. It is not advisable. I'm repeating again. It is not advisable. It is not advisable to start up your business with loan. With loan, it is not advisable. In fact, our loan regime in Nigeria is not even conducive for startup. So when you are starting up and you have access to loan and say nobody the loan, please don't go. I'm advising. I can only advise. Please don't go for it. Even if you have a good financial projection. Even if you have a good financial projection and you see that everything for your financial projection, you have a good cash flow, it's still advisable that you don't go for loan. Don't go for loan. I've talked about financing for startup. I'm talking about how you can use your CSC registration to give more each value to your business. Also talk about the aspect of starting. You can start by yourself, financing. This is what we call bootstrapping, and get more funding, finances from family, friends, so on. Fine and good. Like I said again, loan is not advisable for startup. That's one. That's that area. So in terms, in the aspect of financial projection, like I said earlier, that you need some assumptions. And it is during the process of your market survey, during the process of your MVP, that's where you begin to gather all those assumptions that will help you build up your financial projections. And if you don't get it right at that time, your financial projections might possibly be wrong. Now, when it comes to financial projections, let me quickly call the critical financial aspect that you need to really focus on. Number one, there's what we call cash budget. There's what we call cash flow. Cash budget, cash flow. They are similar, but they still help us to do the same function. Now, you agree with me that one critical thing or one critical aspect of business is cash. Cash is the fuel of your business. If there's a shortage in cash, that shows that there is a problem with the business. And that's why when we do financial projection, one of the critical areas we look at is what we call the cash flow projection. We call the cash flow statement. It's very, very important because that aspect alone, the cash flow statement actually shows how money comes in and money goes out of business. So it takes the differences of how money comes in and what money comes out of the business. So if you're able to manage that cash flow, fine and good, there's no how profits will be very, very, profits definitely will show itself. But cash flow is one of the critical financial projections that every startup must carry out. Every startup must carry it out. Now, for those that have started their business, then in the process of managing the cash flow, then that's where the cash budget comes in. Now, cash budgeting comes in, and this cash budgeting can only work effectively if we keep critical records. Now, that is the accounting aspect of accounting for startup. There are two different things. There's finance for startup, there's accounting for startup. Accounting is looking at the day-to-day, operation, the financial operation, while finances is a broader, is a broader terms in a financial aspect of business. So finances looks beyond accounting. Finances looks aspect of assets, look to the aspect of liability, looks into the aspect of accounting, looks into the aspect of costing, and so many things are embedded when it comes to finance. But account, like I said, for those that are only started, maybe you spend 1 year, 2 years in business, of a good, you can still classify yourself as startup. But at the same time, cash budgeting is quite very important. And these are some of the things that many people don't do. Cash budgeting. And cash budgeting is often done. We advise people that it should be done on a monthly basis. You budget for every month and see whether the money that is coming into the business will be sufficient for your liability for that month. That's what cash budgeting helps you to do. So, but you can't do this if you don't have credible and effective record system. I've always tell people that the record system help you to understand, to help you manage your cash, to help you foresee whether you have cash deficit or you have cash surplus. So at that point, you begin to take critical decisions on saying, okay, if I have cash deficit, what should I do to ensure that I cover up that deficit? If I have cash surplus, what should I do to ensure that that cash surplus does not end up at the sugar point or does not end point at, maybe because you want to enjoy yourself, no, or you want to, over, just to, maybe put bodies together. Because these are some of the things that we have actually seen with startup. There are some areas, there are some instances where they make money, but because they don't plan for that surplus, they believe that surplus will continue in that manner. So they end up, it's either ending up using that surplus for another thing that do not contribute to the growth of the business, or absolutely use it, or squander it. Now, I'm laying emphasis on this because this is the center point of business, cash. If you're able to manage cash effectively, then your business can survive. Your startup, you can survive the startup stage and move on to a level where you begin to talk about scaling up. So again, I'm going to speak more on that, the aspect of cash, because it's quite important, just to open our eyes to that aspect. Cash budget helps you to foresee whether you have cash deficit or you'll be having surplus. At the point of doing that exercise, you also be planning on how to mitigate against that deficit, if there's a deficit, or if there will be a deficit, and also have a plan to make use of your surplus effectively if there will be a surplus. This is quite very important. And like I said, many businesses have actually got to a state that they have surpluses in their business. But because they don't have any plan for that surplus, they eventually either use that surplus not for their businesses, or see that surplus as a means of enjoying themselves. Maybe that's a profit and they need to make more. The ideal thing for cash surplus is, number one, is to reinvest back into the business. Or if you don't want to invest back into it, if the business is huge or whatever, or you can invest in other businesses that can also bring more money or bring more funds. That is the essence of what's planning for cash surplus. For cash deficit, because you already knew, or you're of the opinion that, there'll be a cash deficit in this month, it will also help you to ginger yourself to see, okay, begin to work on how can I get fund or cash to cover up the deficit. Then they're thinking of, what should I do? Where should I go? Who should I meet? What should I do? What business and what should I put together to ensure that I cover that deficit? So these are critical things that many startups don't do. So that's another aspect of the finance aspect that I want to bring to the table. Now, the third aspect I want to look into is the aspect of book recording or record keeping. Now, there have been a lot of, I can't keep records. I don't have the time. When business is moving, you don't have even the time to write all those things and stuff like that. Every entrepreneur must create time, or must create platform, or must create a platform where they must keep their records. Not because of anything, not because maybe I want to use it for because I want to obtain loan. No. Keeping records is for your business. That is the first impression. Many people are keeping records not because of their business. Many people are keeping records because possibly maybe they are forcing them to keep records, or possibly maybe there's a loan or there's a grant somewhere they want to access and they said they should keep their records. No, it shouldn't be. Keeping records must be part and parcel of you as a startup. And why? And like I said, records, bookkeeping are like prophets. Let me give you an instance. We are in 2023. We are actually closing to the end of the year. We're approaching 2024. Ideally, business people should start planning for 2024. Then how do you plan for 2024? All I need to do is go to my records in January 2023. Then look at the things that transpire in terms of sales, in terms of credits, in terms of expenses, everything that happens within that January and is well recorded. All you need to go there, January 2023, and begin to plan within that variables to plan for January 2024. Because the difference of January 2022 and January 2024, the difference might be, there might be a little different. The difference might be positive and also be negative. So, but if you don't have credible records, for example, for January 2023, the question is, how do you want to plan for January 2024? So these are critical, and that's why you said record keeping, the accounting process, the accounting, whatever, is very, very important. Do you need a chartered accountant? Well, for a startup, you don't need a chartered accountant. Thank God today we have various and numerous applications that could help you. In fact, that will help you do analysis. Not only that, that will help you keep your records. These applications are quite important and very effective. Even, like I said, you don't need a chartered accountant or someone that actually did accounting in school to just help you out. The software, the accounting application are there to help us out, to critically help you keep your records. And the keeping of these records using the application will also, like I said, will also help you to do there are some applications that do projection for you. As you keep on using the application, it will do projection for you for year 2024. I'll tell you, okay, in 2024, this is what we have to you in January. This is your sales in February and stuff like that. And that is why I said keeping of records is quite very, very important. Without it, you cannot put a framework and do a projection for your business as we move on. So, like we said, I think we have just 1 hour for this section. I've just laid down some points, and I also want to I'll open the floor now for conversation. If you want to add any comment or want to have any question around so that we'll deliberate, then we'll begin to talk around what I've said so far. So thank you very much. So if there are any contribution, you want to make any comments, you want to ask any question, can you please just let's share and let's begin to talk and let's begin to have conversation around what we said so far. All right. So the floor is open. Anybody?
Hello.
Hello.
So thank you for the presentation.
All right, sir.
Is any software you could recommend for bookkeeping or budgeting, whatever?
Okay. I know we have lots, but okay, so that I won't be partial to someone. I know that we have there are some that are absolutely free, and there are some that you actually pay money for. you subscribe on a monthly basis, or some on a yearly basis, and there are some that are absolutely free. I would advise maybe you go through Google app, or go to Google, search for app. There are some that I've used, and I know I've used, and they are very effective. There's one we call I think Keeper, Kippa. I know I've used that before. I know which one again? I know there's one from. I know there are numerous. In fact, there are some that even help you print out your invoice. They'll help you print invoices for your customer. That you can even send those invoices as to your customer via your WhatsApp or Facebook or any other means. So we have a lot of them. I can't figure, but I know which one. The one I've used so far is the Keeper. That's Kippa. And like I said, we have more on it. So you can go through Google, search for mobile app, accounting mobile app, for businesses. You'll get more. So thank you very much. Any other person? So please, the
So,
conversation is open. Okay.
okay, thank you. Now,
All right,
for
sir.
the share, let's assume you want to raise money and you have a share of 1 million naira.
Yes, sir.
So, or a share of 1 million shares, right? So rather, so
yes.
And you are planning of raising more funds. How can you do that with that share? Maybe you are planning to raise more funds and you have 1 million shares. So can you just elaborate that one for us?
Okay. Now, when I say, at the point of registering your business, your CAC registration, registering business, we have 3 levels. We have business enterprise. We have limited, that's limited liability company. We have private public. Then we have that for the NGOs, for church, monks, and stuff like that. We call it limited by trustees or limited by guarantee. Then the limited by, that's when where we have shares. So the CSC actually have category. We have category of 1 million ordinary shares. We have 2 million ordinary shares. We have above 5 million. We have 10 million ordinary shares. Now, what I'm saying is this, that if you register your business and your business is saying that you've registered a business and the registration of business is carrying that the value your ordinary shares for that business is 1 million naira. So it means that you have already placed a value on your business, and that value is 1 million naira. You understand? That value is what? 1 million naira. So if you find an investor that says, okay, I want to invest in your business, and that investor is bringing like maybe 5 million naira. But your ordinary shares, so it means that you need to, it means, well, two things, it means that you need to do what? Is either you go back to CAC and need to increase the number of your ordinary shares so that it can accommodate the new investors. But for those that are, that are proactive, we register their business with higher ordinary shares. For example, maybe 5 million ordinary shares. So that when they see an investor and say, okay, I've registered my business, because placing that your registration and using that 5 million ordinary shares means that your business as at that time is 5 million naira. I don't know whether you get me. That your business, yes, sir. I have a training. Yes, sir. So now, it means that your business, the value of your business, and at that time is just 5 million naira, because the ordinary, what we call ordinary shares. Shares means how will I put it now? Shares mean shows that the rightful owner of the company. So if you do your CS registration and place 1 million ordinary shares, So it means that the total shares of that company, like I said, is 1 million naira. Anyone that wants to invest in that company cannot go beyond 1 million naira. Is either you are going to sell part of that 1 million naira to that person, whether 500,000 or 400,000, or is either you go back to CAC again and scale up and increase the number of ordinary shares so that it can accommodate investors. Because these are some of the mistakes startup, actually, I won't blame them, because one, the cost of registering is quite very high. But if you want to register 1 million ordinary shares with CAC, it's high, and people find it difficult, to do. Many startups find it difficult to do that registration. But at the same time, we still advise startup to, look for money to place more value on their on their business while they are registering their business. So, for example, if I'm registering my business and I register my business with 5 million ordinary shares, 5 million ordinary shares. So it means that anybody coming for my business, I already place a value of my business. I can tell investor that the worth of my business today is 5 million naira. The worth of my business today is 5 million naira. So the same thing is applicable if I do the same thing with 10 million naira. So I can tell an investor, even if I don't have the 10 million naira in my account, do you understand what I'm saying? Even though I don't have the 10 million naira in my account, I can boldly say that the worth of my business is 10 million naira. So that is so any investor that is not coming in, or you see any investors, so the first thing, you can present your CAC registration to him and put value on the business, and the value of my business today is worth 10 million naira. So the investor we have, that will give more, that will give a level of comfort to the investor as, okay, this person, and let me put it this way, there are so many ICT organizations, so many ICT startups that use this a lot, especially when they are looking for international grants or international investors to, international investors, they definitely don't want to invest in small business. They want to invest in businesses that are, equivalent to, the dollar rate and stuff like that. So when you are not presenting a CAC registration and saying that your ordinary shares is 1 million naira, that's the value of many investors will be looking at 1 million naira. That's too small. That's too small. So, but I'm just only advising, because like I said, many small businesses, many entrepreneurs, find it difficult, like I said, the cost varies, and the cost is very high when you're doing this registration. So I don't know whether I answered that question. So it's quite important that you can place value on your business even at the point of registering your business with CAC.
Okay, thank you very much. So that means if you have a 1 million share and someone is coming with 5 million naira, so you can buy more share to accommodate that.
You can get, so it means, so if you have 1 million naira shares, as you register your business at 1 million naira shares, and somebody is coming with 5 million naira shares, it means that you have to go back to CAC and readjust. You understand? Because you need to readjust. So all those information, and that's why at the level of CAC, you see that they will ask for what we call annual dues. So your process of annual dues, you need to inform them that there's a shift in your ordinary shares now. That your ordinary shares is not 1 million naira now. Your ordinary shares now is not 5 million naira shares, and they will charge you.
Yeah, make it.
All right. So any other question? Like I said, any other question, conversation? Okay.
Okay, I want to know, does the number of shares influence the amount of tax you pay? Let's say, for example, you registered with, let's say, 1 million, and maybe later you increase it to something like 10 million. Does it affect the tax you pay?
Okay, now, let me quickly talk about tax. Okay, now, as a startup, this is a general rule. Tax, when I say tax, I'm talking about company income tax. I'm not talking about payee. I'm not talking pay as you earn. I'm talking about company income tax, which as of today, I think is 30% of your total profits. Now, the new tax system now, the new tax system have actually exempted small businesses. Now, don't let me say small businesses. The new tax system have actually exempted any business that do not have a turnover up to 25 million naira. I don't know whether you get that. If your turnover is not, when I mean turnover, I didn't say profits, your turnover. So anybody have an idea with that? Your turnover, anybody? Just to make the conversation, just to, that anybody understand what turnover means?
Does it mean revenue? I don't know. Is it mean revenue or money in the bank?
Revenue.
It's what? Okay. Yeah, revenue. Okay. All right. Okay. So if let me use that. Okay, I can use revenue. If your revenue or turnover, your revenue is not up to 25 million naira, you are exempted from company income tax, whether your shares is this or that. Do you get me now? If your turnover, your revenue, the money, your total turnover is not up to 25 million naira. I don't know whether they have changed it, but as at the time the tax system is on, it's 25 million naira. So,
Okay,
but
if
your turnover is more than 25 million naira, then you are subjected to tax, company income tax. Then the company income tax is 30% of the company's profits, not the company's turnover, the company's profits.
Sir,
Hope I get that
one
right.
more thing, sir.
Okay.
Yes. Please, can I say
Yes,
something?
yes, you can go on. You can go on.
Okay, what I'm saying, this 25 million naira you're talking about, is it turnover for 1 year, annually or
Yes.
biannual?
Annual.
okay.
Annual. The tax is paid. Yeah.
Okay, I want to find out, like, what other taxes do we need to pay? Like a company need to pay, let's say startup or a company. Since you talked about, no, this one you talked about, it should be the company income tax, CAT,
Yes.
something
Yes.
like that. So, which other taxes are available or are payable for startups?
Okay. The challenge, the challenge with the Nigeria system is that we actually do multiple taxation. Now, naturally, as a startup, like I said, what you pay is your company income tax. Then apart from that, the state governments, the local governments, I need to come down to those levels. The state governments, the local governments actually come and collect some level of taxes, and level of taxes from businesses. They might not even call it taxes, they might just call it some names. Some they call it business permits, some they call it something tournament rates. So all those things absolutely are far, to be candid. They are not classified as tax. There's a difference between tax and rates. Government don't collect rates. As in, the federal government don't collect rates. Local government collects rates. Now, the rates local government collects or whatever now depends on the local government where your business operates. It depends on where your business operates. So I can't say specifically that this is what this local government is collecting. So it depends on your local government where your business is, where, and also the state too, because the company income tax is a tax collected by the federal government. But however, the states are also obliged to also help in collecting that tax. So there's what we call the FIRS. Then there was what we call the state IRS. Now the state IRS is just their work. Their duty is to ensure that they collect what we call payee. That is the personal income tax. Pay as you earn. That is majorly the duty of the state internal revenue. But however, they also support. They also help the FRSC to collect company income tax. So other taxes that are available, unless if you are into specific specific sector. For example, if you are doing consulting, then there's what we call what's this tax now? There's what you collect VAT. There's VAT, but we know that VAT is value. It depends on value. Is not for all startup, specifically for those that are buying, selling and offering some services. So not all startup are engaged now, but majorly what is cut across all startup is the company income tax. Any other tax that comes, some specific taxes, like I said, it might not be now sector oriented. For example, under the ICT, there are some taxes they pay for ICT, and which is maybe some percentage. Some sector too. It depends on their sector, their sector area. So it might not be applicable to all businesses. So, but like I said, there are some, I don't want to say tax, like some rates that are being charged by the state government and also by the local government, which sometimes, people think that it is, no, it's not, though they are all governments anyway, but they are not called tax. They should be called rates.
Like levies, right?
Levies. The local governments don't collect tax, they collect rates and levies. They collect rates and levies.
So company income tax is for FIRS, while personal income tax is for state.
Yes.
Why personal income tax is for states?
It's for states, yes, it's for states. States are the one in charge of that. So that is it. So, like I said, so your businesses, where your business, I understand that people come, a lot of government officials, they just come from nowhere and begin to tax people, and you have to pay this every month. You have to pay this every month. Yes, not all those taxes are actually from the federal government. Like I said, they are from the state. It's either from the states or from the local government. So that's about tax. And for the federal government, like I said, if your turnover is not up to 25 million, you are exempted from the company income tax.
So turnover, like maybe our revenue, or if you have
your revenue. Let me use that common word. If your revenue, your money, your total revenue is not up to 25 million naira.
What if a company have money in the bank that's around 25 million? You have money in the bank which is around 25 million, so you should pay tax on that?
No, if you have, let me understand that.
Let's assume your money in bank is 25 million naira or over 25 million naira, so you pay the tax on that.
No, when you say your money inside the bank, your money inside your bank does not mean that 25 million naira is your turnover. You have to check your books. And that's why we say record keeping is very important. You can have 25 million in your banks, and that doesn't mean that 25 million is your turnover.
Okay, if I understand what he's saying. Now, when he talked about the 25 million naira, he's talking about the money you receive from the goods or the services you're offering, not the money in your bank account. If I get your
You have to give with your, when they want to charge you tax, they won't charge you tax based on your money in your bank. They will charge you tax based on your records. Hello?
Hello, we can hear you.
Okay. I just want to confirm that. So I don't know whether you got me right.
Yes, yes.
Oh, okay, all right. All right. So any other question, please?
So now, okay, now you have a share, you have your share in naira, but you want to raise money in dollars. So if the investor, do you have to buy the share as in, to meet that the dollars rate, and maybe you are coming with $10,000 and you have 1 million shares, so you have to buy the share that's worth that $10,000.
Let me get that, sir. If
Hello.
oh, can you please come again? I didn't hear that. I didn't get that very well.
Like someone to invest $10,000 into your startup. And
Okay.
you have 1 million.
Okay.
You have 1 million naira share.
Okay.
So do you need to buy the share in naira that meets that $10,000, or you can just keep that?
No. At least you see why we are saying that you put value on your business. We are not saying that for if you're saying that you have 1 million naira 9 shares, you register for 1 million 9 is 1 million naira. That's what it means. Let me find someone that actually brought $10,000. Fine and good. What you are saying is this, that investors will not invest. They will not want to invest beyond your own investment. I don't know whether you get me. I don't know whether you get what I'm saying. It's your business, right? Now this is your business, and you have invested just 1 million naira in that business. That's what it means. And somebody is now coming in to bring in $10,000 into that business. Who owns that business? You or the person that owns the $10,000?
It's the
No,
person.
practically, who owns the business?
The person with the business.
The person who owns the $10,000. So what we are saying is this, that instead of, and many investors will not want to invest in that kind because they said you just have 1 million naira shares. So I can't bring, how many percentage of that shares do you want to sell? Because that's the question. What percentage of that 1 million naira share do you want to sell to me, and at what rate? So if you are saying I have 1 million naira shares, and the percentage of that 1 million naira share, I want to give you 50%. So 50% of 1 million naira is what? Is 500,000.
500,000.
So I can only invest 500,000 in your business. So if I'm not coming with 10 million, means that I'm coming to buy you outrightly. That's the fact. So, and that's why you see that you see people going, a lot of people going for higher ordinary, higher value, so that when investors are coming, you can say, okay, I already have 10 million naira. Out of this 10 million naira, I will give you 5 million naira. Oh, I already have 50 million naira. Out of the 50 million naira, I'll give you 25 million, even though they don't have that 50 million naira in their account. I don't know whether you get me. Even though they don't have that 50 million naira in their account, but because they've been able to register that business and say that they already have 50 million naira worth of ordinary shares. So what they are buying from your company is the shares. You understand? What they're buying is the share. So out of the 50 million naira ordinary shares, you are not selling maybe 50% of it. Okay, I want to sell 25 million naira. Let me give you 25 million naira. So I know you understand what I'm saying. So placing value on your business at the point of registration is critically very important. Very, very important. Because it also attracts investors. Because these are some of the things that investors might definitely want to look at before they invest. Like I said, if you are saying your business is the shares of your business, that is the worth of your business is 1 million naira. So it means that anybody that is coming will not come and is only coming to buy from that 1 million naira shares. Right? So if they want to buy from that 1 million naira shares, it's either they buy 50% of that 1 million or they buy 70% of that 1 million. Or so if they are buying above million, it means that gradually they are taking over the business away from you and it is becoming their business.
Okay, so
Do you understand what I'm saying?
Yes,
Yeah, I'm
yes.
listening.
okay, all right. So I think I would like to come in a little bit here since they are asking so many questions around valuation and all. I think
Okay,
we'll have a special session on valuation so that
okay,
we don't draw the time for today. Today we're focused on accounting and finance. So
okay.
it is noteworthy that valuation in startup is much more deep than what
Yes.
he is saying. It's not just about the share capital and all.
Mm-hmm.
Different different VCs, they come in with their own way of valuation of startup, discounted cash flow and all of those things. It's much deeper than that. So um, it's based on, apart from the mathematical aspect, the investors and the investees also have to reach some agreement. So
Agreement, yeah.
it's beyond the share capital. The share capital is even the basic. As your business starts growing, even though your share capital is still 1 million, you might still have an asset or assets that are worth 1 billion. Even
Millions,
if
yeah.
even if on paper that you have 1 million as the share capital, you might have a building that is worth 200 billion and up. So many things come into place. Even if maybe you are running a factory as an agri business, you might have machineries that are worth millions, much more than the share capital on paper. So he's coming from the angle of basic as a startup as you
As
start
a
growing. But
startup,
then as your
yeah.
business grows, of course, you surely have assets that are
Yes.
worth more than when you started. So when it gets there, investors will use a lot of valuation strategies, discounted cash flow, and a lot of all those things. And then a lot of principles will show up. So different investors have some different ways of evaluating startups. So it's even each investor, it depends on the offer they are giving. Someone might want to value your business for 1 million USD for for maybe 5% of investment. And so it's much more deeper than the basic level. Concerning, someone was mentioning about USD and $1 million and all. So what most startups do, they register in the US so that it's easier for them to get investment from US investors, specifically in Delaware. So if you are getting investment from the US, you are working with their rules too, and all of those things so that it's easier. Because if you are trying to repatriate your profit from Nigeria to US, CBN will charge you a lot and a lot of past stuffs there. So the best part is for them to incorporate in the US. It's easier for them to deal with the US investors, and the US investors can easily look into their account and all of that. So I know that if we still take questions on valuation, is much deeper. It's not something we can cover in an hour or 2 hours, because there are strategies and other ways that investors used to value startup. Is a much deeper, your assets, your equipment, and so many things. So it's not just the share capital. What he's saying is just from the beginner level when you are starting, but as you go, of course, you will have assets that are bigger than that. So I think for now, I will suggest that we focus our questions on accounting and finance. If you have any valuation question, I suggest you probably drop it on the page. We would find maybe a VC. I think we have a couple of VCs that might I'm sure. So we'll get in some VCs to handle that maybe on a Saturday. Valuation is a topic of its own. So that's why we left it. So this session is for accounting and finance. So if you have more questions on accounting and finance, so that we don't drag our facilitator. So please, and not just this session, let's try and also keep to the topic so that we don't drag, because I saw that he's even drawing away from accounting and finance and all and so many others. So please, let's keep our question to accounting and finance or any other thing, but then valuation is a much deeper stuff. So if you have more questions, please, you can ask your questions now. I know that he mentioned he has another meeting in like an hour or 40 minutes, so that we can set him free to attend this meeting. So more questions. If you have any questions, raise up your hand. So Mr. Lighto, it's up to you to know if you want
Okay,
to.
all right. Thank you very much for that contribution. I also agree with you, because valuation is actually very, and yes, ma'am. And also agree that what I'm just saying is just the basis. In fact, not even there's a lot to it, And I also, just like you said, that we should create a space where we'll discuss more, and then we'll find more people that are. In fact, we even expertise those that are just their own job is to do valuation, and we have people that they will do that, and give us more information and clarification on. So any other question another question? Like I said, let me just open up. Okay, let me just a kind of recollect what we have said so far. And why it's quite important to note that record keeping is very important. And I keep on laying emphasis on cash budgets, because this is one certain aspect that many startups don't do. Cash budgets. Is either you do it for 3 months or you do it for a month. You do it on a. In fact, I absolutely used to tell startup to do it on a monthly basis. So for the month of October, you do your cash budget. You do it. What's the English now? You do it in projection. So for example, for the month of October, you do your cash budget in September. So you know what aspects of your cash that is coming in for the month and what your expenses look like. Then look at the deficit and begin to look at how can you cover up for that deficit. One thing is that many startups don't prepare their mindset, for cash deficits. They just believe, we'll go to the office, we'll come back, and we need to plan for those things. You already plan for where to get funds to actually augment that space. And when there's surplus, When there's surplus, doesn't mean that is an avenue to, you know, to pop up the champagne. Yeah, fine and well. But it's also an avenue to also start to think that, okay, if there's a surplus, what investment should I make in my business? And what other things should I do? Reply back so that I can have increase or investment. Is a decision you have to take on your own. Not that, you know, it's a decision you have to take on your own as an entrepreneur. Or if you have staff or whatever, you can come together and say, okay, what should we do with this surplus? So that there are so many people that are having surplus and it is idle. Idle surplus. Yeah, they have surplus, but it's idle. They are not investing it. They are not reinvesting it. It's just there, and it's not doing anything for their business. It's not good. So the cash budget will help you do or help you identify these gaps and help you plan for it. Quite important. And like I said, that I'm still emphasis. If you cannot keep records manually, we have, like I said, we have a lot of application that you can use on your phone. In fact, some application will even remind you if you keep your, you know, if you actually put all those parameters on your phone to help you do all those things. So now I see the floor is still.
Hello? Hello? Hello?
Yeah, you can quickly ask your question.
Okay. What is the you have you domicile in Nigeria and your expense. You know, most of startup right now, like tech startups, so most of expenses are in dollars. So do you advise them to keep their money in the dollars accounts or in the naira accounts? So which one is more preferable?
I'm not sure that even me I understand your question. Please, can you make your question clearly? I don't know whether Mr. Olaito is still there.
As in, as in most of startup expenses right now is in dollars. Are you getting expenses?
Okay.
So now, what is it good for startup to keep their money in the naira accounts or the dollars accounts? So to know for safe side.
Okay, I want you to answer that question yourself. You are the CEO of your company, and most of your expenses, 90% of your expenses are in dollars. What would be your decision?
Uh, it's for these regulations that's what I'm trying to ask. All this tax,
All this what?
all the regulation, taxes stuff. How
Okay, I don't know whether Mr. Olaitan is there, but then I think I will answer this. I believe that as the CEO of your company, you know the best decision. Now, for you to talk about the rates and the tax and all, of course, you have to make your research. I mentioned earlier that most startups incorporate in Delaware. So far, I think Delaware, US, has been the most favorable climb for both startups and VCs. Most VCs too, they register their investment firm in Delaware. So I think by the time you relate with your fellow startups, you will be able to compare and know the most favorable climb for you to register your firm. I think was it 2 years ago that I read somewhere that is it Mark Zuckerberg? I can't remember whether it is Elon Musk that he paid $0. Like he didn't pay anything for the so most companies, even in the US, they they consider so many climbs. There is this island too, I've forgotten the name. Most US companies, they go there to register too, because the amount of tax they pay there is very low. So it's up to you to research, know where you want to make the domicile of your company based on the registration fee and the taxes of the organization. Someone just sent me something around forming an LLC and all. So I think I'll post this on your page. But then, as I mentioned earlier, it's your decision to make. Know what other startups are doing. One, know if it's favorable to you as a startup. For example, if your investors are most of your investors, or you want most of your investors to come from the US, you don't need anyone to tell you to incorporate your organization in the US. And most favorable states so far, from what other startups are doing and other VCs are doing, is Delaware. So it's up to you. And your expenses too, you said your expenses are in dollars. So um, you don't need anyone to let you know that you need to incorporate your firm in the US, so that it's easier for you to sort out all of those stuff. In fact, most startups in Nigeria now, they are domiciled in the US, and they have their staff here. Most of their CEOs are outside, and they run things from outside. So there is a lot going around the startup um, sector. So you need to meet up with other people, know what's going on, and then know the one that will benefit you best. I will send this. There is a picture here concerning the what it costs to register organizations in the US. I will send it to you guys, though I'm not sure where this source is from, but then you can verify. So there are the cost of the state fees and annual fees, how to form LLC in other climes. New Mexico, $50, Mississippi, $53, Colorado, $50, Montana, $35. I will send this on the page, but then you need to Google it up to be sure that this is right, and then before you make use of it. I think that's for that. I hope I answered your question well, Abbas.
Yes, yes, I understand your points. Yes, thank you.
Yeah, so you building a startups survive well in an ecosystem. So one of the ecosystems now, at least you guys, once you graduate from the program, you belong to our Ideate Fellows group. So if there are upcoming information or trends within the startup sector, we normally share a lot of information so that you get used to the trends. So you have to check the climes that favor startups. Know where most startups are raising their money. Most startups are raising money outside, from VCs outside. So you know the states in the US. As I mentioned, most of them register in Delaware, because their rules are not much like when you compare it with others, and all the taxes and all, it's less of a hassle. So, but then you are still encouraged to do your own research, ask other startups the best country to register, and all of those things, and make your decision. So any other question? I think Mr. Olaito joined another meeting. He mentioned he was rushing out for another meeting. If you have any other questions, you can drop the questions. Otherwise, we'll call it a day, and we meet you guys on Thursday. But then if you have any other questions for him, you can send on the page and we'll forward to him. Okay, I think he's back.
Thank you very much. Sorry, I quickly just rushed. I quickly had to attend to another thing immediately. So thank you very much. I actually had your conversation. Thank you so much for that. It's quite very important. And just like I just want to emphasis on working the ecosystem. It's very, very important to understand the ecosystem where your businesses lies, understands what's going on in that environment, and also network and leverage on whatever opportunities that comes out of it. So thank you very much. That's good.
Okay, thank you very much, Mr. Laito, for creating out time today, the resources you shared, the knowledge you shared, and all. We really appreciate that. And thank you, everyone that showed up today. So we look forward to seeing you guys on Thursday. Meanwhile, continue to engage on what you've been taught, ask questions, reach out to the speakers, and reconnect and all. Thank you once again, and we wish you the best of the week ahead. Thank you. Bye, everyone.